So today we're going to talk about the daily candle, and how we could use the daily candle and the daily time frame to frame our trade. So today, let us see. As you can see, I've put a line here explaining the close of this trade, and let us change the charts to bar charts. As you understand, with ICT we mostly use the power of 3: open, manipulation, distribution, then close. Most of the time the market usually opens, forms a Judas swing, then goes to the true objective, and with that we are mostly inclined to follow the Judas swing most of the time, and that makes our trades invalid, and we mostly get stopped out. So with this, let me explain how we could use this to frame our trade. So we're gonna use the power of 3 here. As you can see, the market opened, rallied down, created a Judas swing, took out this low, then rallied higher. This is today's trade. Still an ongoing trading day, but I suppose the draw to liquidity will be here on the high. Let us put the candles where. So as you can see, this is a daily time frame. The market rallied, took out this low the previous day, then rallied higher, and with this we could be using this to frame our trade. How will you frame our trade? Let us see here. Our trade will be framed like this. As you can see, the previous day, the day closed here, mostly on the futures market. The close of the futures market usually is from 4 p.m. New York time, and as you can see, when 4 reached this, there were a little bit of candles here, consolidation, meaning the market was closing. There was no volatility or active trading. So with this, I just put this line for here for context and for you guys to understand what I'm talking about. While observing this, the market closed, and this whole trading down here is the Judas swing that I'm talking about. This whole trading down here is the Judas swing that I'm talking about. Most of the time the market forms a Judas swing before going to the real move, and when it forms a Judas swing, most of the time we tend to get in the trade at the Judas swing and failing to reach the objective, since you are mostly stopped out before it goes to its objective. And as you can see, it's most beneficial to take your trade at this zone, since it's in deep discount going to the premium. As you can see today, I think this is the draw to liquidity of the market today. The market reached the objective. I was focusing on this fair value gap here, and as you can see, the market already reached this fair value gap, and I think it will be drawing to the high of this candle there. And as you see here, when you want to enter a trade here, this is a very nice signal to get in. The market formed an order block here on the Judas swing side, which this is the low of this candle. The low of the day was already created here, formed a Judas swing, then rallied higher, took out this liquidity, formed a nice market structure shift. This is a 15-minute time frame, formed a very nice market structure shift here, then retraced to this fair value gap, and this is another block which resisted this price from going down. Retraced to this fair value gap. You should always focus on the bodies here, and as you can see, it already aligned with my perspective. When it retraced to this fair value gap, to this order block, to the top of this order block, you can take your buy here. A very nice long trade here, putting your stop loss on this low, risking a bit less, then taking out this whole trade maybe to the objective, to the midpoint of this fair value gap, as your objective. So you could be taking your partials in these zones here till you reach your objective, and it's a nice 1 to 13 trade with a nice 1 to 13 trade with the risk of $135 to get $1,841 when trading with one lot size. And with that, let us meet in the next video, guys. Be safe.